Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Apologies for not posting last few days. I've got so many videos planned, but I have not had time at all. It's absolutely been crazy at work. I don't know about you guys, but some days I come home, I'm like, I can't do this. And you know what I end up doing? Investing more and more into this portfolio and other places, just to make sure that InshaAllah we get out of this crazy rat race, and InshaAllah one day have the ability to just sit at home, wake up in the morning and maybe 9 o'clock, whatever, and just chill and sit around and do absolutely nothing. I can't wait for that, inshallah. And the reason I said that is because I'm really exhausted. Like, genuinely just came back from work. I've been planning these videos for the last couple of days, but I have not had the time to record the videos or even edit it or anything like that. So right now I'm reporting is basically I'm recording this video on basically Thursday afternoon, and inshallah basically we've got one more day and then I can rest of the weekend and release all the videos that are planned for the next week. Anyway, the reason I'm saying that is because what you see in front of you is my actual portfolio. What you see in front of you is actually basically I go to work every single morning. Every penny I make, I'll try to invest as much as I can. I basically budget everything that I'm doing on weekly basis, monthly basis, so I can invest, so I can get out of this crazy rat race. Genuinely, that's my plan, inshallah. I hope you investing wisely. I hope you saving. I hope you taking care of your future, and you're not just gambling every penny that you have right now. I hope that's what is happening. In today's video, I'm going to talk about one Dividend King. And the reason I'm going to talk about this is because they've reported earnings recently. And talking about passive income, probably this is one of the best companies out there when it comes to free cash flow generation, when it comes to basically paying that dividend, increasing that dividend. This is one of the companies that have been increasing their dividend for over 50 plus years. That means over the last 50 years, this company has literally, it doesn't matter what happened in the world, right? The way the macroeconomy was down, up, whatever, this company was increasing their dividends. This company is a basically multinational consumer goods or corporation. It has been around for a very long time. It sells a wide range of basically personal health, hygiene, and household care products, and that company is Procter Gamble. They've basically released the earnings recently. We will have a look at that. We'll have a look at the financials, valuation, and everything else, and I'll tell you at the end what I'm doing with the company, because I do own it in my portfolio. So like I said to you, they actually have products like beauty, grooming, they have fabric and home care, they've got healthcare, they've got the whole lot, and they are basically, they've in every country, almost 80 countries worldwide. So let's have a look at the financial for this company. But before we do that, if you can join us on the Patreon account, it absolutely will help the channel. Of course, you get access to the family portfolio, you get access to the Discord where a lot of brothers are sharing good practices. You've got all the dividend trackers, you've got Sharia compliant investing ebook, and many other things that I normally share, including the monthly undervalued stocks and so on. Now, the company we're talking about today, like I said, is Procter Gamble. As you can see, for the 1 year, this company is up about 7.5%. So it really didn't do as much as the S&P 500 did last year. So what we're now going to do is look at basically the latest earnings report. And as you can see here, okay, they actually beat top line and bottom line. So just beat the bottom line and over 300 million in terms of the revenue side of things. Now, everything looks absolutely fine. I haven't found anything that is a bit alarming. One of the things I really enjoyed and I see is the fact that the company is actually spending, basically paying about $10 billion in dividends and also repurchasing the 6 to 7 billion of their common shares in fiscal year 2025. Now, this is giving back to shareholders. Okay, the fact that you get that dividend and they're buying back their own shares, 6 to 7 billion dollars, right, worth of shares. What that means for me anyway, and for anyone who owns the shares, is the fact that your one share is now worth more because the company is buying back their own shares. You own more of the company as they buy more of their shares, which is really good. And this is why I don't like when companies though buy their shares when is quite expensive. So let's have a look at where we are with this company in terms of whether basically it's expensive or not. But before we get to that, I'm going to talk about the financials to see if it's actually healthy business that we can all invest in. Okay, and the first thing we're going to do is basically look at the revenue, because this is the sales. This comes from the selling that those products that company makes. 70 billion in 2015 to right now $84 billion. So every single year they have been growing that basically top line, the revenue side of things. They spend quite a lot of money, okay, about $40.7 billion. Out of that, 84 went to the cost of the revenue. So to make that money, they've invested, basically they have to invest that much, or they have to spend that much. The gross profit was $43 billion, which is absolutely ridiculous. Now, of course, the company spends a lot of money on sales and general administration side of things. They, of course, have research and development, all the other stuff, okay? And then we get to the net income, which is about $15.4 billion. Let's call it $15.5 billion, which is quite nice. So from 2015, 7 billion to 10.5, 15, drop in 2018, then more drop in 2019, then it picked up in 2020, and since then it has been increasing slightly, okay, to right now $15.5 billion, which is nice to see. Now in terms of basic EPS earnings per share, $2.50 to right now $6.45. Now the latest report that they've actually basically sent a couple of days ago was, if you can see here, the fabric and home care was up over 2% year over year, and when it comes to baby and feminine and family care, it's about 3% up, basically, which is what you expect from a company this size. This is not one of the companies that are just gonna grow that fast, okay? Then don't do that. And like I said to you guys, that I really like the fact that they're buying back their own shares and so on, so we kind of have an idea. Now let's go to a couple of more things on this. Well, let's look at the balance sheet, and then I'll give you more information about the company. So total current assets, we're looking at about $25.6 billion right now. So we want to see if the total current assets, okay, this is stuff that basically they can liquidate. This is basically assets that they can liquidate in the next 12 months if they need to pay off any debt that they have, any current basic liabilities. So 25.6 billion of current assets against total current liabilities of $33.7 billion. So it's slightly lower, okay, bit lower than actually what they have right now. So current assets is slightly lower than current liabilities. But when you look at total assets of 122 billion, okay, in comparison to 71 billion, basically they have more assets in the long run than actually liabilities, which is absolutely fine. So again, the fact that companies generating excellent free cash flow that we've already seen, the basically how much net income the company has, okay, and looking at the free cash flow here, what you will notice is they've got about over $11.4 billion, okay, of free cash flow. Now what we're going to do now is look at the rest of the financials of the company, and then I'll give you the valuation, inshallah. Now as you can see here, it's currently trading $165 per share, and 388 billion when it comes to market cap. It has wide economic growth, and beta is very, very low. Current PE is looking about 28, the forward PE about 23, and the 5-year average of 25. So it seems a little bit expensive. 16.6 is basically the sector medium, and in terms of dividend, this is where company shines, okay. 2.5 dividend yield in terms of the percentage, 58% when it comes to the payout ratio, and annually they will pay you just over $4. Now the last 5 years they grew up at 6%, which is what I'm looking for. 6, 7, slightly, maybe slightly higher, okay, because we want to beat inflation. We wanted this to actually basically every single year to be inflation. That's our main target, because remember, the alternative is your money to sit in an account and basically grow nothing. So if these companies are basically giving us a raise every single year, that's slightly beating the inflation, then of course that's what we need, right? Dividend growth, we're looking about a streak of 68 years. That is basically Dividend King and more. Dividend safety 99%, $15.8 billion of free cash flow. The 5-year free cash flow for the compound annual growth for the last 5 years, we're looking at about 5%. Free cash flow margin of over 20%. Basically we're looking for normally 10%. Now, profit margin, we're looking at about 18%, operating margin of 23%, return on equity, we're looking at about 31%, return on invested capital of 22%. So absolutely amazing in terms of profitability, in terms of what the management are doing with our capital and so on. The net income margin with the compound annual growth rate for the last 5 years is 28%. Total return in the last 10 years about 8% annually. Revenue growth, compound annual growth rate for 4.5%. Again, this is what I expected from this company, about 3 to about 7% in terms of that revenue growth. EPS about over just 3%, and we've already seen current assets is slightly lower than current liabilities, which means it's now less than 1. We normally want something that's slightly higher than 1, but that's not a huge deal because we do have about $15.8 billion of free cash flow right now. Growth estimate for next year for the company is 6%. In fact, I want to check and update this. And to do that, we're going to go in here because I want to see if that has changed since I've actually put the videos. So all right, so it's still more or less the same EPS and 3%. Okay, so more or less the same to what we had basically 6.4 and then basically 3.4. Now, in terms of current price, we've already seen fair value for Morningstar is basically $143 per share. That's about 12% premium right now. Fair value, in fact, I want to double check this because I haven't updated that recently. So that's about 15%, not far off. Okay, so about 15%. So we're gonna update that just to change that to 15%, and then we can see if Simply Wall Street is actually saying it's about 29% upside from where we are. $226 per share is where they think price should be. According to TipRank, $180, about 12% upside from where we are. According to Seeking Alpha, it's about 170. Let's call it 180 is about 8% away from where we are. And then when it comes to Seeking Alpha, okay, it's also basically they say in a buy. So a lot of buys here this side, but Morningstar is what I always follow, and I think this gives us a slightly bit of a margin of safety. So we will look at the valuations that I came out with at the end, and as you can see here from Sharia compliance side of things, absolutely no issues. And like I said as before, they are buying back their own shares. In fact, they are going to buy more of their shares. We've seen $6 to $7 billion in 2025. Inshallah. Right, like moving on to the next part. Morningstar we've already seen. Seeking Alpha, Simply Wall Street, dividend discount model gave me 144, multiple valuations 163, average the whole thing out you got 171. Right now it's trading number 165. That gives us about 4% difference margin of safety. If we say this is probably one of the easy ones that to actually not worry about too much about in terms of the risk side of things. But if you want a 5%, you can buy this stock at 165. If you say I need a bit more because it seems a bit more expensive right now, which I definitely agree, $154 per share from 106. That's about less than $10 from where we are right now, which is absolutely fine. To be honest with you, that's the range I would be buying more of if it comes down to $154 per share. Now, if I show you my average for this stock, I do own 34.5 shares of this stock. Let me double check that's the right company. Okay, 4,600 pounds invested right now, 20% up, 784 pounds or basically in gains right now. $141 per share is basically my average, or 111 pounds. Now, if it hits this price, okay, because I haven't added to the stock for a very long time, if it comes down to 150ish, I think I will buy more of, because I have had this company in my portfolio for a very long time and I haven't actually added to it. Last time I bought, they have been paying me some dividends, but the last time I bought has been very long time. As you can see, all you can see here is dividends. Actually, last time I bought is basically 2023. So it's been quite some time. This December 2023 was the last time I bought one share of this company. Since then, I've actually just been getting those dividends. I haven't done anything to it. And as you can see in those dividends, there's £23, £23, £23, and then £22 there. So of course, just collecting those dividends and not doing anything and just reinvesting that dividend. And as you can see here, it's done well overall. So what I'm going to do, inshallah, is just put a alert for me to when it hits this basically $150 per share, then inshallah I'll probably start buying more of. I would love to get to at least a 50 share for this company. And if I can do that, that would be absolutely amazing. If you enjoying this type of content and you appreciate, just to show your appreciation, inshallah, by just liking the video if you can't do anything else. Of course, if you can join us in the Patreon account, it will cost you about 15p per day, whatever. And of course, inshallah, you can get access to a lot of things. You can meet a lot of the brothers who are sharing very good practices, who are sharing their portfolios, what they're buying, why they're not buying, and so on. So anyway, I'm going to stop the video here. Have a wonderful day. In the next couple of days, inshallah, I will be releasing more videos. If you are as tired as I am, put in the comment section. Let me know what you guys do, what you are up to, inshallah. And in the end of the day, one of the most important thing for us is to get out of this mad financial craziness, the rat race, whatever you want to call it. And alhamdulillah, if you're well off in your in retirement and so on, well done to all of you. Have a wonderful day. Assalamu Alaikum.